Well, we had the Fed meeting yesterday, and the S&P futures were kind of trading right where they are right now. And here we are. Went up, went down. What? They didn't like what he said all of a sudden? We got to figure it out here on pre-market prep. Jim Tassoni's going to join us at 8:35. He's going to give us his cautious take on the markets. But let's get going. We got some earnings to cover as well. Pre-market prep comes to you right now.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
Okay, we're down 19 handles. That doesn't tell the whole story. We got up near yesterday's high and fell apart 5 a.m. this morning. Got to the almost in the intraday low from yesterday. So we're not calming down yet, folks. The buck is on the rebound here after just a little consolidation, up 47 cents, 103.56. TLT getting the hops. Up 75 cents, 91.93. Crude flat, USO 72.57, up slightly. GLD pulling back after making that new all-time high, bound a buck 25 is 79.86. Silver ETF still above 30, but down 43 cents, 30.32. And Bitcoin looked like it was going to pop, get away from that 85K level, but here we are. We're back down again. The futures are down $105 at 85,530. Good morning to Dennis. Good morning to Brent. Good morning to CF. And boy, oh boy, volatility still here, Dennis.
Yeah, volatility definitely still here. It looked like it was green light go given by Powell yesterday. Overnight rally happens. Everything is going just peachy for the bulls. And what happens overnight? The rally fades and turns back to red. Fade trade still apparent. I am blaming the overseas markets for the U.S. pullback because China got whacked hard last night. Europe got whacked hard last night, and U.S. says, hey, we don't want to be left out, so we'll get whacked our markets here too. So that's what I'm blaming here for the overnight sell-off.
I blame Powell.
What? Why?
I mean, do you ever want to hear the word transitory again? Right?
Not really.
Okay. Transitory, basically what he said was that inflation is creeping higher and GDP is going down. So you're having rising inflation and slower growth. What word is that? That's stagflation. I mean, I don't know what was apparent. I don't know what the bulls saw in that presentation yesterday to rip it. I don't. I don't know. Christian, I mean, you're more level-headed, calm economic guy. I mean, did you think his comments were so bullish?
Well, happy March Madness, by the way, guys. I hope you guys have your
I
I'm
haven't
going to
even
come
done
in
my
right.
bracket yet. I haven't even done my bracket.
Me
You got,
neither.
you got time. I have McNeese winning it all. I don't know who McNeese is. Sorry, I'll keep us on track here, but don't forget to fill out your brackets. Yesterday with Powell, we also have quadruple witching this week, and I think that's also driving some flows because the market was rallying before. One of the things that I noticed was that the VIX was dipping and the market was rallying before Powell. Do I think we really learned anything with Powell yesterday? No, I don't think that he was dovish. I don't think that he was really hawkish either. He basically, I was looking for something more out of him, and I didn't hear it. And I don't know exactly why the markets were rallying off of him. I think it's just more of like quadruple witching and things, some positioning that has to happen. I'm looking at Fed fund futures. They really haven't budged too much for May. There's still a 21% chance that they cut interest rates in May, and then the probability of June picked up a little bit. That was around 50%. That has moved up to a 65% chance that they're going to cut in June. And that was the other thing, was that they plan to cut 50 basis points. The one this year is what their plan is for now. And then the one thing that was a little bit of a surprise was the fact that they're dialing down the balance sheet runoff. So I guess that, that was really, besides the lovely transitory talk about inflation, which I think made everybody's head spin yesterday, they did announce that they're going to be not stopping, but lessening the balance sheet runoff. So that was notable. But
what's the implication of that, Christian? The balance sheet runoff.
I don't think it's much. It's just, people say, well, that's quantitative, that's QT, that's quantitative tightening. So the fact that they're doing a little bit less of that is a little bit dovish for the markets, but I don't know. I don't think that really impacts things that much.
I thought they were very dovish yesterday, and I thought the markets rightfully applauded it. I do agree, that I was shocked to use the transitory word again, since that got him into so much trouble in 2020, when obviously we're coming out of, COVID in 2021, where inflation was running rampant. I guess it was 2021. I'm losing track of years, but when inflation was running rampant, they used that word transitory for like 3 or 4 months before they realized, hey, it's not transitory. We better start raising rates. So it's interesting that he says the tariffs, that could be transitory. It's interesting that they went back to that word, because that's the word that got them in so much trouble before. And I think that's the point that Joel was trying to make, which, you're just going to ignore the tariffs. I mean, I think that's what, the bulls wanted to hear, though, is that, hey, we're not going to worry about the tariffs right now. It could even be transitory. The effects of that, we're just not going to worry about it. So I think that's why we rallied yesterday. And then we sold off towards the end of the day. We did have some sell imbalances. We did have some profit taking probably from the day. And then we just had this overnight reaction here where the overnight markets really got killed. So I don't think the market was ready for that either, where Europe had been doing really well. Obviously, China's been, making new all-time high, or not new 52-week highs. And I don't think the U.S. market's ready for that.
If the street, and I mean, I know it's triple witch, and that's one thing that's really a great point that you brought up, Christian. But if Powell's speech was really dovish, and the street is going to take it that way, then the S&Ps are going to be up 100 points today.
I don't understand where regarding the dovish. I didn't think it was dovish.
Either did I. That's why I'm saying.
Yeah,
you didn't think it was. I think when he says transitory to the tariffs, that's a very dovish statement, saying, "Hey, we know tariffs are inflationary, but we're just going to say that it's probably transitory.
We're just going to ignore them." I mean,
I think that's a dovish statement in itself. But also, I thought his language in the presser.
It's dumb. It's a dumb statement.
I didn't think he seemed like. It seemed like he was leading us to a path where they actually could cut rates sooner than we think. What did the Fed funds futures do, Christian? This would be a good question to answer, because our opinions are all slanted and biased. But the Fed funds futures, gives a better opinion. Can you bring that up? Did we go up or down the chances of a June rate cut yesterday after the meeting? Do we know?
Yeah, I'm going to put it.
Christian's going to bring that up
in the chat, and then
the TLT's rallying, Dennis. I mean,
well, that's what I'm saying too. The TLT is your reason, that I think bond traders are saying yes to sooner cuts. I think if it was hawkish, I think we'd be killed. I honestly think the overnight sell-off today is because of the overnight market, the overseas market.
Okay.
I don't think it was to do with what Powell that was digesting, and they're like all of a sudden they don't like what he was saying. Christian, what do you see there in the overnight?
Joel, I put it in the chat if you want to bring that up, or if you want me to. If you can't do it,
go ahead. You can go ahead and add it.
Oh, okay. Hold on.
Or Brentster, can you add it? Brentster's
yeah.
It's in the chat.
I'm going to put you to the background. We'll let Brent do some of the stuff in the background here.
So I mentioned that Fed Fund futures for May did not move at all. There's still a 21% chance that they're going to cut rates in June. Where it changed mostly is the June meeting. So that's the second next meeting. That's June 18th. That was implying about a 50% chance, and that moved up to 65.
Okay.
So that was the one that moved. Not so much the next meeting, but the meeting thereafter.
So not a huge move, but it moved up a little bit, the chances of a rate cut in June. So it moved up a bit. So,
Yeah.
okay. So it's telling me bond traders, but then I see the move in the TLT, and obviously bond traders liked something because we're up substantially here again. Like we were trading around 90.40 when the Fed meeting happened, and now we're 91.85. I know, don't look at the 91.18.
I know. I
Steve,
just saw that. I think
91.87. We're up here again. So bond traders are applauding whatever the hell he was saying, at least, from the TLT perspective. The question is, are equity traders going to applaud it today as well? Like, I think there's a chance this dip gets bought is what I'm saying. I'm thinking there's a chance this dip gets bought.
I like what Richard said here. He mentioned several times
Sure.
that he was waiting in the hard data before he acts. So right now, the data that he has, the inflation data that we got last month, the unemployment data that we got last month, his statements reflect that data, and that's what he's going on. And if the data changes, then he'll change. I guess that's the bottom. I'm really interested to see how we end this day and tomorrow with the quad witch. Very different factors, but I just wonder if people are really caught after yesterday. You had the rally, you had the sell off at the end of the day, big selling balances on the close. Then they jacked it up overnight, right? And they're like, here we go, baby. We're going back 5,900, just
Yeah.
easy 6,000. I wonder if people are, they're caught. We're only down 23 handles, 22 handles. For me, is that we had an 80 handle sell off overnight from the high to the low. To me,
Can you show that, Joel? Yeah, show us that sell off.
To me, that is not symptomatic of a bull market.
We're definitely not in a bull market.
Okay.
Not even close. We are sorry, folks, we are full on in a bear market. We are. I know it's not down 20%, but the bears still have complete control here. And in bear markets, rallies get sold. That's just what happens. So the question is, do we have a path to get out of this? That's what I'm trying to argue. Is there a path for us to get out of this?
And that's
Maybe.
a fair argument.
But there's also a path here where we still have reciprocal tariffs coming April the 2nd. So what I said yesterday on the show and in the STN room yesterday, I was saying, is I think we have a window to be bullish here. But I don't know. I think if reciprocal tariffs come in, I think we can retest those lows. So I think there's a path here. I think you're just playing the chop. Like last night when we rip up 50, 60 handles, from, where we were at 2 o'clock, you're probably taking profits into it. When we sell off 80 handles, makes me more inclined to buy it. So I think that's the fade trade. That was my acronym to start the year. And I know the stocks in there aren't doing very good, but the F in fade was fade. Fade trade is just continuing to work. And that's buying dips, selling rips, short and rips, buying dips. It continues to work. Christian, what do you think? Like, how are you approaching it?
Well, one other thing, keep that chart of the S&P up there. I thought that was interesting that the market as well seems to be having difficulties with rallying right at the end of the day. So we stopped going up yesterday at 3 o'clock, and we started to kind of taper off. And I find that it's interesting that we're not really getting really strong closes. The closes that have been on the weaker side. For a while we were going through where there was this imbalance where the market would kind of shoot up at we would close very strong, and we're just not getting those. So I just find that there's not a lot of the commitment doesn't really seem that it's there as it was as months passed. So it's kind of interesting that also when I look at the 1 hour chart of the S&P, we're basically back to where we started for the week. So it's almost as if what you're discussing is selling the rip, and it seems like we're now trading in a range, but lower than where we were, going back a month. So I'm waiting to see which way.
New range.
What's that?
A new range.
Yeah, it seems like we're kind of in a new short-term range for now, and I want to see which way it's going to break. I'm still favoring when you look under the hood. I'm trying to take note of like what areas are doing well, and yesterday it was more of a growth day. But I really think to your point about selling the rip and buying the dip and so forth, I really think with the growth stocks is where you want to be selling the rip. most, and I think the value stocks are going to continue to the value stocks are going to continue to outperform. So I'm favoring those. I like what's going on in energy stocks right now. I think that there's some hiding places like that are outperforming. So I got long Chevron the other day, and Chevron is doing well. I also like what's going on in copper and things like FCX. So again, just an overall perspective is that I think you really have to watch your groups.
I think the value trade is still on. I think the international trade is still on here too. So despite, the significant sell-off we saw in European markets here overnight, and despite the significant sell-offs we saw in China here overnight, I kind of think that's an area that I may want to be buying the dip on. What are your thoughts here, international? Let's just stay here for a second, because I do think it was one of the main reasons the S&P's turned. But finally, Europe's been going up relentlessly here. You can look at the EFA if you want, and we've just made a new 52-week high again yesterday. Nothing goes straight up. I mean, you get pullbacks here, and those pullbacks are opportunities here. You're getting a 1% pullback in the EFA here this morning, actually more than that. I mean, maybe this is just one of those opportunities again where we look to diversify ourselves maybe out of North America a little bit here and using that opportunity. Would you be buying the dip here, European, Christian?
I've been underexposed in Europe. The only thing I have on is Deutsche Bank, so I'll be looking at that. I'll also be looking at buying the dip in China today. The Hang Seng, as you guys have mentioned, was down decently. I think it was down like 2.4%. So I might be looking at buying the dip in BABA today. But I think people have gotten on the bandwagon of Europe and China very quickly. So I actually think it's good that these things pull back a little bit.
I think so. I think, it's all about rebalancing too. And I mean, it's not just you that have been underexposed in Europe. It is the world has been underexposed in Europe and China. So, they were exposed for a long time, and then it has been the best place to be. That's the reason the multiples, in China are trading 10 or 11 times, and the multiples in the US trading 22 times, because everybody is overexposed to the US markets. So that is changing a little bit here. Again, that all depends on tariffs and everything going forward too. So you can bet on America. We can be buying the dip on US stocks, and it's always been a great bet to bet on the USA. I'm not going to, say, it's been the best place to be for the last 10 years, 100%. Just the question is this trade have legs? Does this rebalancing that we saw in February continue? I think as long as you're getting uncertainty out of the administration, it might. So I think I am with you here. Maybe not necessarily buying, Bob had such a run, I'd love it back at 120. I don't want to be too early on it. I still have a small piece. I've sold, a lot of my BABA because it was just from 80 to 140 is an incredible move. But I think, looking at international stocks on dips isn't a bad idea.
Let's go to Pinduoduo. They had earnings last night, a mixed report, 276 versus 256. But they missed on sales, 15.15, 15.68 was the estimate. So mixed report, pulling it down, had a nice run, down 8.5. I mean, you can buy. I mean, you were much lower in this. You had a spike down to 113.58. Let's see how it. Let's see it make a low. I mean, if you want to buy the dip here in this area, let it make a couple lows in the same, in the same area. Just for me, I mean, this went that last time it got up to this 130 area. It caught a cold, pulled back to 110, right to the, to the 50-day. If it builds a base again, here, let's say, 115, 120, then I'd say giddy up. The rally's still on the pullback. But just look at the way it reacted off 130 last time. Be a little bit cautious here. There is a double bottom on the dailies at 117. If you want to go off a daily chart of a Chinese stock in the US market.
12 times earnings is still cheap relative to,
Mhm.
not relative to China, because that's where China's at, but relative to the world, it's still cheap. I think there will be people who want to come and buy the dip. 110 looks fantastic down there. I don't know if it gets that far. The report wasn't bad. I think it's just a matter of sales missed, and it's sales missing, when you're, had a run from $90 back in January up to 130. So I mean, maybe it's give it a couple days and see where, instead of trying to be a hero, but I kind of like the 110 area.
Okay. And then Baba. Baba down $6, following it. It's holding up a heck of a lot better than the last time it got over 140. So we're back under 140 right now. I think that's a good psychological level there. So, FXI pulling back as well. Just also another earnings from last night. I think an
Sure.
earnings surprise here out of Five Below. Maybe it was just they got above the low bar, trading up in the pre-market. Or it was trading up in the after hours at a pop and a drop. They beat on both ends, and then they raised guidance. So we were watching this one in the STN room, and it had a nice pop initially, gave it all the way back to scratch, and then picked up steam again, and still holding up in this market. So uh, a little bit of a pop here, I guess. If you own this thing over 200, it's not as great as a report as if you just bought the thing over the last 5 or 6 days.
The stock and this, I've not liked this for a long time. I was dead wrong in November because the stock went from 80 to 120, and I was saying I didn't think it was justified. Obviously, it's come back down. I just think this is just not the business that I want to be in when margins have been squeezed. I don't know if they're going to 10 below eventually. I haven't been in one of those stores in probably 10 years, so I don't know if they got $10 stuff in there. I don't know how you keep selling all the stuff you were selling for $5 10 years ago for still $5. So is it still holding to its name $5 or below? I'm not sure if it's even holding to that anymore. Like the dollar store has had to break the buck. Did the $5 store have to break the $5? I'm asking. I don't know the answer to that. But if they didn't break the $5, man, their margin's got to be getting squeezed.
Or are they talking about a potential price in the stock?
Meaning going to $5?
Yeah.
I'm just not a fan.
Okay.
Again, some
I
stocks
was
you like,
being
some
sneaky.
stocks you don't like. I know it went from $200 down to 75, and you're like, oh yeah, this is the big turnaround story. I think this is the place in retail that I just still don't want to be. Is there a relief pop? I think that's what this is a relief pop.
Yep.
More than anything.
See if it has some legs. So, Dennis, I know you wanted to talk about Tesla. I know that a lot's going on in Tesla. Had a pretty good day yesterday. Looks like we're going to
Yeah.
get some follow through, but do we have some cautiousness in the bull camp?
Yeah, we have a lot of headlines here. So last night, stock was popping. Lutnick actually was on Fox saying, to go out and buy Tesla. I can't believe how unbelievably cheap it is. And the stock was popping off last night too on Lutnick comments as well. You can see the chart if you're looking, last night trade up to $242. So that would have put it up another $7 from the close, almost another $6.50 from the close. We have had a substantial sell-off in the last few hours. Again, with the overall U.S. equity markets, but also some news directly for Tesla here. One is a recall in 46,096 U.S. Cybertrucks because the side panels may actually detach. So you saw a video of this a couple days ago where somebody was showing their side panel falling off. Obviously, Tesla's taking note of this because they're recalling 46,000 of the vehicles. You buy a $110,000 truck and then the side panel falls off. Doesn't sound very, I've never really heard of that happening before on other vehicles, so it doesn't sound great. And then the other thing, so that's obviously a catalyst for knocking it down. But what I find is interesting, and I have it here, is Dan Ives, who we've had on the show lots of time. We love Dan Ives from Wedbush. He's been right about so much. So, I want to give him, the credit where credit is due. He's been right about a lot of things. But he came out with a note last week, table pounding to buy Tesla, table pounding. He comes out this morning with a new note, and he's talking about brand damage, that Musk brand damage and his activities in Doge are globally taking on a life of their own. Only one person can fix this, and this is Musk. So he says a lot of things concerning in this little note. Let's call it like it is. Tesla is going through a crisis, and there is one person who can fix this, and this is Musk. If you agree or disagree with Doge, it misses the point that by Musk spending 110% of his time with Doge and not as Tesla CEO, since President Trump got back into the White House. This has essentially turned Tesla into a political symbol, and that is a bad thing. This is what we've been talking about on pre-market prep for 2 months. This is why I sold all my Tesla in January. The brand damage started off as limited in our view based on our initial survey work. Well, I think you should, I think there
Do
was
another
more.
survey, Dan.
Yeah. So, anyways, but now has spread. I'll just read it to you without stopping. The brand damage has started off as limited in our view based on our initial survey work, but now has spread globally over the last few weeks into what we would characterize as a brand tornado crisis moment for Musk and Tesla. This is the biggest Tesla bull on the street saying this stuff. The violence at Tesla dealers, cars being keyed in parking lots, social movements against Musk around the globe have all created a massive overhang for Tesla's stock. Trump buying a Tesla with an event at the White House last week is a great political theater, but does not resolve the current brand demand problem for Musk and Tesla. In some ways, makes it even more a political lightning rod issue for Tesla. So this is the moment of truth for Musk. I know it's kind of long, but it's so important, because we've obviously all traded Tesla. This is the moment of truth for Musk, and there are 2 things Elon needs to do to end this crisis and make sure it does not snowball into a much more black swan event for the Tesla brand over the coming years. The 2 things he must do, and I haven't read this part, 2 things he must do in the next few months to stop the crisis. Formally announce Musk is going to balance Doge and being Tesla's CEO. Musk needs to make a statement, and his actions speak louder than words. We would expect this to happen either before or during the first quarter earnings conference call in early May. Investors need to see Musk take a step back and balance his Doge and Tesla CEO roles. If he does not, or if he does this, the heat from Musk around Doge will start to dissipate and among most of the critics, and this will leave a scar on Tesla, but no permanent brand damage. I agree with all of this. Giving the roadmap and timing for the new lower cost vehicles to be released into the market. This is number 2. Giving the roadmap and timing for the new lower cost vehicles to be released in the market in 2025, along with unsupervised FSD rollout in Austin in June. With a Model Y refresh inventory issues and a host of demand issues with Musk brand damage a worry, there is one person Tesla investors need to hear from, Musk. And then we are maintaining our outperform and 550 price target and remain firmly bullish on Tesla. But Musk needs to change course here. Tesla's future depends on it. So bravo to Ives for finally acknowledging everything that I've been saying and we've been saying on pre-market prep for the last 2 months. I mean, I couldn't agree more with everything that he's saying. It's the reason that I sold Tesla, because I couldn't quantify the brand damage. He's acknowledging it now and saying that it's an issue. He's saying it can be just a scar, and I agree. I think if Musk can now, I think I agree with that. Like, he needs to address this. He needs to not just hide in the background and say, hey, we're putting cameras on the cars, and if your guys are going to attack our cars, we're going to be able to see you. And he needs to stop the people from doing this. And by doing this, he needs to acknowledge, that he's the CEO of a public company here. And it's one thing to be involved with politics, but it's another thing to just leave your company completely to its own, devices, and then go 110% of your time into Doge and not even be thinking about what's happening when your own brand is under crisis here. So bravo to Ives for this note. He was a little late getting on our bandwagon, but he's acknowledged it now, and I think it's important. I do think there's a place where Tesla can get back to all-time highs eventually, but I agree with Ives. This brand damage is an unknown right now, and he needs to stop. He needs to fix it, somehow fix it. The haters are not a small. I know Plasma's a big Tesla, and we love Plasma. He's been in the chat for a long time. He says it's a small minority. I don't think so. I think Ives acknowledging this now. This has been the bull thesis. Oh, it's just a few people. Oh, Germany, is coming around. This is Dan Ives, who works. Musk knows Dan Ives. Don't kid yourself. He's at all these events. Musk will probably read this note. It's important. This note is not just to the public. It's to Musk as well. So we've been talking about this. I was the biggest Tesla bull last year in 2024. And I'm worried significantly about the brand damage. I worried enough that I sold the stock. So I want to eventually get back in this story. But the brand damage needs to stop. And the only way to do that is for him to take a step back from the politics.
Well said. I mean, we talked about the 250 area. It didn't get there yesterday. I'm looking at the move, what basically 27, 37, 47. We had a 35-point move. You add 17. I mean, if this thing gets back, and instead of trying to pick a bottom of this, I'm just going to keep bringing down the level where if it can get above the level and stay, because I find when you take that approach, then it kind of keeps you out of trouble. Instead, oh, we're going to buy the 50 Pro, we're going to lean on this bottom or whatever. Right now, I mean, and we're not that far above it. Whatever I've said, whatever's going on politically, whatever going, if the Bulls can establish a 234 bid here, it just make a protect that low, get there, and also remember Tesla. I mean, it's a wild child, but it calms down and it consolidates. I mean, look at this daily chart. I mean, there's periods where it stays in the same area. I mean, it's a higher price stock, but I mean, if you continue this kind of price action between 217, 250, stabilize here, then I can get back. I can get back on the bullish bandwagon. Right now, it's two big, fat, red, ugly monthly candles. I mean, you could step in here, and I think you're risking down to the 217 low. So I think a lot of it is market dependent too. If we calm down, if the sell off goes, the S&Ps will just take it right along. What is the next delivery figures coming out on
Well,
Tesla?
we get different delivery figures from different countries at different times. Obviously the January figures were not good coming out of Europe. And obviously, we know any numbers they're getting in North America. They've kind of already said that they're going to be down some. Some people are saying they're going to be down a lot. We don't know how much Republicans picked up the slack for the Dems. So it's a little bit of an unknown coming out of the U.S. But I mean, Tesla's not due to report quarterly earnings here for another month and a half. So I don't know if we're going to get the full numbers here for a little while.
Okay.
Jim Tassoni in the background here.
Yeah,
Christian,
let's bring him on.
Let's bring Jim into this conversation. He's been sitting here in the background. We love Jim Tassoni. He's coming on the show here for a long time now. Let's get him.
Jim Tassoni, CEO, Armor Wealth Strategies, joining us here on PreMarket to congratulate me on Michigan winning the Big Ten basketball tournament.
Yes, that's exactly what I'm here for. For the, I guess everybody argued about whether it was a meaningless or meaningful win, and I think judging by the seeding, we can go with the data here. We can go with
the data.
So,
love it. All right, Jim. We need your level head assessment here of the market. This just start from the most important event over the last 24 hours, and that's Mr. Powell. Love to hear your take on his speech, the market reaction yesterday, and more importantly, the market reaction today.
Yeah, it's funny, and I think they may have mentioned it on some of the shows yesterday afternoon, but there's always comments that we make in our lives that we say in real time, and then they come back to haunt us in the future, whether they be personally, professionally, especially what we do, coming on, giving opinions, giving thoughts. They can always come back to haunt us. And I feel like Jay Powell had kind of one of those moments yesterday. And I think we all sort of remember the question from several meetings ago when someone asked him about stagflation, and he made that little quip, I don't see the stag nor the flation. And then it's kind of funny because yesterday, as you mentioned, Joel, not only did they increase their outlook for inflation, they decreased their outlook for growth. So if that's not the definition of potential stagflation, I don't know what is. And so continue to be somewhat cautious here. We talked last week, judging on the TLT. I think Christian and I, during our conversation, both said that, that 89.50 area was maybe a good place to initiate a long in the TLT. We ended up getting long at 89.67. We'll see if that works out or not. But so far, so good. But we think, TLT's going higher, rates are going lower. And it's not for the good reasons that you want that to happen. I think it's because of the fear that the market's pricing in about some potential headwinds heading into the back half of the year.
Okay, and let's go to the numbers here on the SPY. Your note here, first weekly bearish close since November of 23. That was the end of last week.
Yeah.
What do we do? What do we got to do? What do we got to do
Yes.
to get out of here?
So it's been a great run, and we've been fortunate to be mostly long the majority of it in the right spots. But with that being said, we were looking at that 568 level as a key level on the weekly close. And it's kind of been an area that's been interesting even on the daily closes this week. And Monday and yesterday, we were able to poke our head above that level during the day, but then close below it. So we haven't been able to close on the daily above 568. And we also think on a weekly, it's vitally important to get above that level as quickly as possible on a weekly close. As long as we're below that level, right now, we don't see enough momentum on the downside to be short. So our SPY trade would be flat right here. But if we take out, we think there's some support in the 552 level, which is a little bit lower than here, obviously. But that's an area that we're keying in on to hold. If we can't hold that, we could see another leg lower. I think, again, though, you got to be tactical here. You got to look for pockets. I think just being long SPY or long the market in general is a dicey proposition given the fact of where we're trading right now.
It's a tough market. Like, it's a tough market to call here. And, obviously we do pre-market prep and people want market calls continuous. There's just sometimes where it's curveballs being thrown at you left and right. And I mean, it was somewhat predictable that we'd eventually get a sell-off into the tariffs. So, I wasn't surprised by the sell-off in February, especially in the Canadian markets. And I'm not surprised, we go from 610 down to 550 on SPY and we get a little bit of a bounce here. But we are far from out of the woods. We are far from like green light, go buy all the dips. We're going back to all-time highs in a month. It can happen. Anything can happen. I think if Trump backs down on tariffs, it can happen. But we are just in a very volatile time right now, not only in the markets, but politically. There's uncertainty everywhere. I just think like being all in on this market here right now sounds scary to me. Like I was looking at my long-term portfolio and I'd raised some cash. I'm sitting at around 33% cash here right now. And, I want to put some of that to work, and I put a little bit to work in the emerging markets, but and usually I always sit like 15 or 20% cash, so it's not like I'm crazy about. I'm never 100% all in on anything because I'm 49 years old and I'm just not, I always have like having a little bit of cash. But I think like, what are you thinking, Jim, here? Like, let's just say you're sitting here in this market. Is this a time, this recent rally, to like raise cash if you didn't? Or is this a time where you're putting cash to work if you had too much cash? Just thoughts here. Like, take a longer term perspective.
Yeah, I think again, it pays to be tactical here. I think, and we've been saying it all year, and Dennis, you've been spot on with this, buy the dips, sell the rips. I think sell the rips probably more even so than buy the dips. I think if you were fortunate enough to nibble on some of these names down lower and you've gotten some reasonable gains in the last couple of weeks, I don't think it hurts to lighten up. We're continuing to look for patterns in charts and in stocks where we've seen a sell-off and we've seen sort of a stabilization, and we can define a level. And I think that's the key in this market. No matter what stock, index, whatever you're trading, it's have a level where you're wrong. Don't get married to positions in this market. Have conviction, find areas and trades that you like, find trades that you like. And we've been talking about this for months now. know your outs, because this market can change on a dime. Like you said, Trump comes out and gives some relief on the tariffs, we could rip. And you never want to be all in or all out. You got to be tactical here. You got to look for areas to nibble, and we've been doing that. But we also know, hey, we're nibbling here, but if we see a close below here or a violation of this level, we'll get out and we'll try that trade again at a future date. We're not going to destroy capital in the middle of this volatility.
Hey, Jim, I was noticing a couple calls that you've made recently. You were talking about number one, the financials, and then I want to talk about your commodities as well. Your look at commodities too. But just notice, and we haven't really given too much attention so far this morning, but the financials have been doing fairly well. This week, XLF is up about 2%. So the financials have been moving nicely versus Qs for this week, which are only up about 1/4%. What are you thinking here in terms of, do you think that the financials, do you think that they begin to kind of pick back up? And I was impressed with the with names like JP Morgan, Wells Fargo yesterday. What are you looking at in the group?
Yeah, that's exactly where we went. And it was actually last Thursday that we saw, after this kind of this sell-off in the XLF, starting midweek of the week of March 3rd, we saw that big sell-off that week. And then this is a perfect textbook example of the sell-off and then kind of a few days of basing. We found a level, for us, it was 47 in the XLF. And so on last Thursday, we figured, hey, we'll take a shot right around 47.50. If we get a close below 47, we'll be out. And so far, that trade's worked for us. We're up a couple bucks. And obviously, if you like to play individual names, it's pretty simple. You can play some of the larger ones in that ETF, the JP Morgans, the Wells Fargos, even the Berkshires. Those are the names that we would be interested in here. And again, we're not trying to be heroes. We're just trying to identify areas and let the market do what it's going to do. We put a trade on. If it goes against us, we'll get out. If the trade's working, we'll continue to ride it until it's not working anymore.
Gotcha. And also, you're also looking at some commodity plays, and I know we've talked a little bit about that. Where FCX got an upgrade this morning. Yeah. I've seen a lot of call positioning in that. You've also got a couple. You're also looking at energy and a little bit of gold too, right?
Yeah. So we've been long all year. Gold, oil to some extent, but definitely gold, natural gas, copper. The actual commodities have been great, and what we're starting to want to look at now, the gold miners have ripped. So that trade may be a little bit more difficult. But if you look at some of these copper names and some of these natural gas names, their appreciation's been nowhere near the underlying commodity. So one of two things are going to happen. Either obviously the commodity is going to come back, or perhaps like we've seen in the gold miners so far this year, we could see a catch-up trade in some of the individual names. So we're looking at names like EQT, Southern Copper, SCCO, and even Tech, TECK. Those three names, potential catch-up names in the copper and natural gas space.
Very nice. And by the way, great call on gold. I think you came out with that call about a couple months ago, I would say. So that's been, gold has really broken out. And I agree that the gold miners are not the easiest trade in the world. I've had difficulty with that group, but continues to work right now.
Yeah, absolutely. Absolutely.
Small caps, Jim, just broke out. Well, looked like you cleared the 206 area yesterday. I mean, all these charts just look the same. You nibble it into small caps at all?
Yeah, it's funny because those of us who have been here for the last 6 months or so know that I've been somewhat negative on small caps, and this was
Or flat out negative, not somewhat, flat out
that's
negative.
fair. That's fair. Flat out negative. Flat out negative. I haven't touched them for a long time. But then I started to see something the beginning of this week, again, kind of that basing pattern after that sell-off and potentially a stabilization and a move higher. Right now, we got long in the IWM right at about 203. So it hasn't been, that was on Monday. It hasn't been a great trade yet. We're up a couple bucks. Again, we're also looking at some of the individual names. You've got SFM, FTAI, FN. Those are names that we're in right now too. The small cap looks interesting to me. I don't know if this is going to be a sustained move or if it's going to be a rotation or if we're just going to have to lick our wounds and move on. But I think this is an interesting place to maybe play a bounce in either individual small cap names or the IWM in general.
It's just an important time for the markets overall. And I mean, the small caps are obviously going to, perform and be a little bit more beta than, obviously the broad market. I think one thing going forward is, TLT, and you've been a TLT trader, so I want to bring this conversation here, is been having a nice rally here. It's up again overnight. We're up another $1 here overnight. Is a little bit of a flight to safety thing. So sometimes you can be fooled in thinking that, TLT is going up. A lot bond traders think rates are going down and, this is going to be good for the overall market. But there's also the flight to safety feature of TLT where sometimes it's like, why is it going up? And I think a little bit of this overnight rally is just flight to safety. But if interest rates, long-term rates, which TLT obviously moves opposite to, continue to drift lower, that's got to be, good for the IWM specifically, but good for stocks overall. Are you still focused, and what are your thoughts on the TLT?
Yeah, I think that's exactly right, at least in the short term. I think the flight to safety, rates coming down, good for small caps, good for stocks, as long as we don't see a total destruction of GDP and or growth in the market. If the reason people are fleeing to TLT or other bond fixed income instruments is because we're entering a recession or growth falls off a cliff, then being in small caps is probably not the place you want to be. But at least in the short term, there's that inverse relationship. We see rates come down, the algorithms and the big traders in the market, rates down, good for small caps up. So that's why I think at least for a trade, if maybe not a long-term investment, this is an interesting place for small caps.
All right. So picking your spots and picking them carefully. What else anything else that you want to cover with us today?
One interesting place that I've been looking, and this is kind of, I will caveat it with speculative area, some international stocks, smaller dollar amounts, some ADRs mixed in here. So I want to caveat that ahead of time. But one place that I've been looking at that looks really interesting to me is some of these international and emerging market financials and bank stocks. And stocks, even stocks in Japan like MUFG, MFG, those are two of the larger banks in Japan. And then you have HDB, which is the largest bank in India, and ITUB down in Latin
lot of B's
America.
in there. A lot of B's in there.
Yeah.
The
For bank.
like their
B
B's.
for bank. But those are those four names are names that have hit my radar screen lately. This just seems to be an interesting area here. Maybe, and I don't know, maybe not, but it could be a little bit more of a defensive way to play emerging markets and international rather than, as Dennis alluded to earlier, rather than chasing the BABAs and things that have run from 80 to 140 and maybe it's a little bit of a more difficult spot to get in. Some of these names, I mean, they've had some nice moves, but there's some consolidation going on, and I think that there may be, if this international trade or this emerging market trade continues to have legs into the back half of the year, this may be an interesting way to play it going forward.
I believe this small-time investor, I think his name is Warren Buffett, has also been
I
buying.
know, I was thinking about that too.
Has been buying those Japanese banks too. So that's a great observation. Great call.
Yeah.
All right, Jim Tassoni, you know him, CIO Armor Wealth Strategies, joining us here on Pre-Market Prep. Thanks, Jim. We'll chat about the tournament offline.
Sounds good. Good luck tonight.
Okay.
All right.
Thanks, Jim.
Yeah, actually, I may need to take the day off tomorrow. Michigan has a 10 o'clock game. So I'll be staying up. Yeah, they threw
It's
us
gonna be
out.
a late night for you.
Yeah, late night. for
Crimea
me.
River. I'm an Edmonton Oilers fan, and they're always 9:30, 10 o'clock games. So I'm up late all the time watching my hockey team. So I'm used to those late nights. Okay. Christian Fromhertz, back to these markets here. And, we continue to leak here overnight. There's been no sniff of a rally here. Even in the overseas markets, they're not rallying much either, still leaking. FXI is now down 2.5%. That's the biggest fall for FXI maybe this year. Like, that is a big fall, down a buck here. I guess there's been some falls in there, maybe bigger than that, but it's a big fall nonetheless. I don't know. What are your thoughts here? Are you nibbling your toe, buying dips? Like, how's Christian Fromhertz approaching this day?
Nibbling a little bit. One of the things that I want to watch, so we haven't really talked about this too much, but the VIX is sitting here around 20. I think it actually went below, I think in the overnight session, or maybe towards the end of yesterday, it dropped below 20. So yeah, I don't like the price action, in some of the days that we're getting. For example, if we go back to, what was it? Not yesterday. So that's Tuesday, where we dropped and we didn't do anything. So I do, like, before I can really do much more than like nibble around some positions, I want to see that buy the dip mentality. Tuesday to me was a little bit discouraging when we dropped in the first hour and didn't do anything for the whole day. So I think that you really have to be patient. And I think that overall, I think the patience might play out a little bit. So I think just being very careful about how you're going in and out of this market. Going back to just to finish my thought on the VIX, like that's encouraging to me that we're not like in the middle of the 20s anymore. So I'm still thinking that I want to see those institutions, like I want to see that buy the dip mentality come out a little bit more, and then I can be a little bit more aggressive with some of my positions. So that's kind of what I'm watching for today.
One thing I wanted to say is Burke.B not down again. Is this the best stock ever right now? Like, the dang thing goes up on the up days, and I know yesterday it fell off a little bit, but it seems like overnight, it seems like it's just like I said it yesterday, being long Burke.B at the close and selling the open. And sure, okay, you can say, oh, well, you're going to only scratch it here today, but everything's been killed here overnight, from where it was, and Burke.B still not down. I mean, this stock is just relentlessly higher. It's got a big buy-in balance here again this morning of 28,000 shares. And I don't totally understand. Like, I get, it's defensive. I get it's got insurance companies which are defensive. I get it's got financials and it's defensive. But the XLF has been beat up pretty hard. And Burke.B is still sitting up here at all-time highs. Is it just like this flight to quality that, we've just got to be with Warren because he knows best? Like, what are your guys' thoughts here? As Burke.B just seems relentless to not sell off.
So I may have made a little mistake the other day, because I had a nice trade. I think we reviewed it yesterday, and I sold out of Berkshire, and I've been waiting for a little bit of a dip to get back in, but it's not giving me the dip to get back in. So back to your earlier question, like what do I want to be buying the dip in? Things like Berkshire, because I think that this market is going to continue to trade like this, and I think it's a conservative trade. We know that he's got a lot of cash. That's where the market wants to be right now. We've already talked about treasuries moving up. I think treasuries are also telling us something, that you want to be in more conservative stocks. So the issue is with the strongest stocks, you're not getting that pullback. But I would love to get back into Berkshire. I don't want to buy it right here.
Yeah, seems a champ. Looking at that chart,
Unbelievable.
yeah, a lot of it has to
He's the
do.
GOAT. You want to know who
Yep.
the GOAT is? It's right there. When your stock makes new all-time highs and everything else is falling apart around you, that's the GOAT.
No.
Earnings. We are kind of out of earnings season, but tonight we get a lot of earnings from a lot of different sectors here. So I'll just go through the list here. We got Micron reporting here tonight. We got FedEx reporting here tonight. We have Nike reporting here tonight. We have Lennar from
No.
the home builders. 4 basically different areas of the economy. We got tech. We got obviously, deliveries and consumer consumer products, Nike consumer products, and then we have home builders too. I mean, fun night. We're going to see a lot of different things here. I just think we should go through these really quickly here, like Nike, low bar, I would say. Lennar, very low bar. Micron, I would say higher bar because the stock has run up a bit here, and then FedEx, low bar. Any thoughts on any of these, Christian? You playing any of these going in? I know you get down and dirty.
This is a tough group. I want to be. I think I want to be watching and listening to these earnings calls rather than taking trades in this group. You're going to hear for Nike. It's going to be what are we going to learn about? What do they think about tariffs? Micron, I think we had a guest on earlier in the week. I want to hear about the cycle in Micron, but I don't know. Out of these 4, this is like the final 4 of for March Madness. If you had to pick one of these stocks, which one do you go long on earnings?
Man, okay, so we have to go long one.
Joel just shook his head. He's like, no.
I would just if something goes up a lot, I'd sell it. If it goes down a lot, I'd buy it.
He's full believer in the fade
I-
trade. Joel's a full believer in the fade trade.
You know what? I'm still perplexed by this whole move from yesterday and today. And one thing that I try to be consistent about is when turns in consolidation, and maybe today, but we'll calm down. Maybe we're gonna have an inside day, but you got quad witch coming tomorrow, so I see continued volatility. I'd like to see us stay green on the day or get green. Make a new closing high for the week, and I'll feel a whole hell of a lot better about the market than I do right now.
I hope Micron sells off because I bought this Micron at 90 3 times and sold it up, 3 times. It's been a great trade and a great range. Be awesome to bring it back down to that 85 to 90 area again. I don't know if that's going to happen here. I actually don't mind the technicals looking at it right here. It's kind of, it's been holding up well. But interesting. And also a headline on Micron here today. Not that's a major headline, but NVIDIA did announce something with Samsung, and Micron was selling off a little bit on that last night. It's been forgotten here now, but just keep that in mind if you're trading Micron today.
Yeah, and if you were in the STN room post-close, you saw Dennis maneuver in that one after going long after
Yeah, you got to maneuver.
Yeah, boy, oh boy, I was tired after that. I don't know how you do that till 8 o'clock every night. But tomorrow we have CC Legator. He joins us on the Quad Witch expirations, which I'm sure he'll have a lot to say. What's going on in open interest? Looking forward to that. And we're gonna hop over. The day is for our STN.
Yeah, so if you weren't with us yesterday and listening, so we did officially launch our new product, Stock Trader Network. It's stocktradernetwork.com. Brent will post the link there, and we had a lot of people come over, sign up yesterday, so we've got a fun room there. We were trading with you guys yesterday. We took you obviously through the open. We took you through the day. We had some great guests, 4 great guests yesterday during the day. And we took you through the close too, and breaking some news and doing some trades with you guys in the STN room. We got a nice little group in there. So if you want to join, the code again for your pre-market prep listeners, I'm going to screw it up, is PMPSTN. So if you want to sign up at stocktradernetwork.com to get an extra $20 off, the code is PMPSTN. Hope to see you there. And we're going to head over there right now.